London. Welcome to the RANsquawk weekly wrap. Today, Friday, March the 16th. Just going to take a quick look ahead at some of the key issues which will be coming to the forefront in the trading week ahead. So firstly, on Wednesday, we have the UK Chancellor Osborne presenting the budget for the UK on Wednesday, who is under some pressure from his own political party to be slightly more pro-business in keeping with the general Conservative Party theme. We've already had a warning out earlier this week from Fitch regarding the UK economy, placing them on outlook negative, alongside the rating actions taken by Moody's earlier, and that has reaffirmed the AAA, but also noting that the current budgetary constraints going forward for the UK, just something to keep an eye on, and therefore the budget does come under some further focus. There is some reports in the press this week that Chancellor Osborne will announce a cut in the 50% tax rate for high earners, bringing that either down to 45 or 40%, and he will then use this money to help the smaller businesses and the less well-off in the UK society. So just something to be aware of there, especially given that the budget itself is expected to be fully funded with less borrowing out on the capital markets. On that note, there has been press reports this week of a 100-year or even perpetual gilt, which could be announced by the UK Chancellor Osborne, and we have already seen gilt prices under some selling pressure throughout the week, allied with the general weakness in the fixed income markets on both sides of the pond, but gilts in particular on focus in terms of this budget, if more relief is given to those high earners, likely to boost the equity space as they have more disposable income. Also worth keeping an eye on cable in terms of the market trades at the announcement of the budget. Another thing to be aware of is the 14.4 billion euros worth of Greek bond redemptions, which are coming due next week, which was the cause of the expedited PSI and second Greek bailout talks over the earlier part of this year. There may be a creeping in of market nervousness as we head towards that deadline. We have seen source comments out today from the officials that there will be 5.9 billion euros worth of the second Greek bailout being available to Greece on Monday. However, the IMF as of yet have not confirmed their allocation of funds in order to match these redemption payments. So just something to be aware of as we head in towards next week. Also, the EFSF will be coming to the market in terms of their funding for the Greek bailout. They will be coming to the market firstly in 6-month T-bills, which will be for around 2 billion euros, and much more in market focus will be the EFSF bond issuance. At the back end of the week, they are rumoured to be issuing a benchmark 5-year, and in the early part of the week, a longer dated bond of between 20 to 30 years, with the EFSF having never tapped the far end of the curve. Generally, EFSF paper has been well bid, but given that the stability situation in Greece is not confirmed, with the EFSF already tapping the markets for Ireland and Portugal, just keep an eye on that bond issuance on Monday if it does indeed occur for that 20 to 30 year period, especially with Germany rather bullish in their stance on their not increasing the European firewalls beyond their current capabilities. If any market nervousness does again come into Greece ahead of their elections in 6 to 7 weeks, the market may be in for a volatile session. So just something there to keep in mind as we head towards the later part of the week. Well, that's enough from me. Hope you've had a great trading weekend. We'll be joining you at the usual time next week. Thank you very much for listening.